Crypto Hotep here with another investing video. We are on week 24 of the Family Portfolio Tracker update. If you are unfamiliar with the Family Portfolio, feel free and go to the channel, go to week number 1 and watch that video because it describes my whole methodology, my thought process, and why I'm doing it. In a nutshell, what I did was I provided my family with a list of companies and name brands that were related to stocks and asked them to pick their top 5, top 3, and what have you. They made a short list. We used M1 Finance, and we still do, for our broker of choice to put those stocks in what they call pies. And pies are basically sub-portfolios within the bigger portfolio. And so every family member has their own pie of stocks. And every week we look at an update on the stocks, the market, any big events happening, how we're feeling, what we're thinking, and just tracking the overall investment journey. These videos are for educational purposes only, and they're specifically for me and my family. So hopefully they're educational for my family. Whenever I'm gone, they can view these videos, and hopefully they are beneficial. If they are beneficial to you, fantastic. Feel free to like, subscribe, comment if you want, and let me know what you think. And anything that I say, any stocks here that we put out here is not financial advice. Don't just buy stocks because I just said that, because I'm telling you about other stocks we have. Do your own research, consult a professional before you do anything involving trading or investing with stocks, crypto, whatever. That being said, we can jump right in, but before we go to week 24, we go to week 23 just to see where we were at the week prior. So here on week 23, the balance was $8.21 in M1 Finance. The dividends earned were $5.43, and the weighted rate of return was $11.69. So let's look at this week. So this week we are at $845.14. Okay. Dividends earned $6.21, so we had a little bit of dividend activity there. And then the weighted rate of return boosted over 13%, over 13.5% at 13.61. So let's see what's been going on here. So in this portfolio here, we've had a little bit of dividend activity since last week. So we've had a dividend payout from Procter & Gamble, Apple, Colgate, and O. And as you can see, these are small amounts. This is a small account that we are working with and that we're building up. So before anybody says anything like Crypto Hotep, these are only pennies. You are correct, they are pennies. But guess what? I didn't have to add these pennies to get them. I just held my stocks, and the company paid us for holding them. And so the thought process is, if you own good companies, if you own companies that are of substance, that have good track record, good financials, there's no problem in holding them for the long haul and adding to those positions, increasing your positions with those dividend companies, which will in turn increase these amounts as well. So with that being said, we did have a dividend payout from Caterpillar of 4 cents here. And then our buys, we did have a couple buys today actually. We had O, that was in my portfolio. We had Costco, which I believe that was in our oldest portfolio. Celsius, which was in my wife's portfolio. Nintendo, which was in one of our youngest or middle portfolio. And then Starbucks, which was in the middle or youngest portfolio as well. So all in all, a couple good buys here. And let's do a quick snapshot of everybody's pie of stocks here. As always, we go bottom up. At the bottom is my wife, again with the weighted rate of return in the negative. So negative 25%. Yes, that's a lot. Negative 25% is a lot. But we can withstand the volatility. As you know by the name, Crypto Hotep, made my name first with crypto. So holding negative 25% is kind of a walk in the park here. But negative gain of $12 here. And the reason is, if we look at it, there's only 3 stocks in her portfolio, right? So kept it real simple. Celsius being the bigger one, and unfortunately, that's the one that's causing the most grief. Now, again, we have to look at timing, right? Don't just focus on the right now, but kind of have that Warren Buffett type of perspectives where Warren Buffett does not worry about price action that happens in the short term. It's more of the long term and how that company is going to be doing. I personally like Celsius. I looked at their earnings call that just passed. Their earnings call gave me hope with the company that it's moving in the right direction. They have a strategic partnership with Pepsi as well. My assumption is that's for like distribution as well. And then they also beat their revenue and their earnings per share. I like this company, and just seeing like their competitors and where their competitors are in terms of Monster, for instance. Monster's earnings were abysmal. They were not good at all. And so a lot of that is due in the fact that Celsius is eating their lunch in this energy drink industry. So again, like the company, like where it's going, and we're still holding here. Pepsi and Google, these are substantially great companies. These are those kind of, Warren Buffett calls them like those beautiful companies. The beautiful companies that are solid and that are here to stay, and you can hold these companies for years and years and years to come. So we're just a little bit in the down right now, but I think we will have a turnaround. Celsius is in a key level as well from a charting perspective. So we do need to see some buying pressure in that key level, or we may even be buying cheaper as well. But we're still buying. Let's go to our middle stock. Our middle stock's up over 8.25%, looks like. And we have 18 cents dividend earned here for our middle. And our middle is very good stock. We have very good stock selection. 5 stocks here. We have Amazon, Costco, Nintendo, Target, and Starbucks. Very good selection here. Amazon down almost 3%. Not really worried about that on that position. We have Costco up a staggering 21% for Costco. Nintendo, a staggering 6%. And ironically, Nintendo was down. Nintendo has been bleeding. But one article that I did read this week that I got a notification on is Nintendo is turning around, and they potentially will be releasing a new video game console in 2025. That's huge news because Nintendo Switch it's a pretty older system now. It's funny to say that. I can remember my first Nintendo actually, but Nintendo Switch is a pretty older system now, and it's looking to be revamped. So it is one of the most popular systems, but that was good to see that Nintendo is trying to innovate here, and they will be releasing something new. Target over 8.5% here, very good. And then Starbucks with their new CEO change down a little bit over close to 1%. Watch out for Starbucks. That's all I'm going to say. Watch out for Starbucks. I like the CEO switch. I think it's a fantastic move. And I think Starbucks turnaround story is going to be something for the ages. Okay, so let's go to our youngest here. Our youngest is up over 25%. That is not a misprint, and I didn't stutter. 25%. Market gain of $12.85 here. Our youngest is almost cracking $100. And that may be chump change to some people, but again, this is a small account. And if you look at the stocks, we have 4 stocks here. Starbucks, right? Up over 23% on Starbucks. Well, Crypto Hotep, well, your middle had Starbucks. Why are they down 1%? And then, your youngest is up 23%. The timing of the purchases. Our youngest wanted Starbucks at a different time than our middle did. So that came with different pricing timing as well. And that's completely fine. Apple up over 31% in Apple. We were steadily buying Apple when people were counting Apple out. Tesla. I always go back to Tesla because Tesla was bleeding out for about a month and a half, and we were just buying it at the low. Just buying it because we felt very confident in Tesla, very confident in Elon's leadership, very confident in that company, period. Nintendo up over 7% here based on that news that we just talked about. Overall, Fantastic portfolio for our youngest here. Very simple too. Only 4 stocks. Only 4 stocks. Our oldest is at the highest spot that they have been in the whole time that we've been tracking this portfolio. Up over 21%, market gain of $10, over $10.50, and dividends earned 30 cents. Our oldest has even less stocks, only 3. McDonald's, Apple, Costco. Fantastic companies, fantastic stocks here. These companies aren't going anywhere. These are, as Buffett says, beautiful companies. Why are they beautiful companies? Because they're long-standing, they have great financial record, and they are the kings, queens, whatever you want in their industry, right? McDonald's did put out several news or a couple news articles in terms of new value menus, new value meals, fighting inflation, those type of things. Apple, we have iPhone 16 coming out, and that whole iPhone and Apple event, that's even going to boost the price even more. And then Costco, honestly, nothing's beating Costco, and Costco is the cheat code. So just a fantastic portfolio here. It's just 3 stocks, but they're very solid stocks, and they all pay dividend as well. So great portfolio here. And last but not least, we'll look at my stocks here. So my stocks, I am very proud of my stock portfolio here. My stocks consist of 50 holdings, and I made that 50 for a reason. I didn't want 47, didn't want 45, didn't want 49. I just wanted kind of like an even 50 there. And then for year to date, I'm up over 10%. Beating inflation, love to see it. Market gain of over $168.48. And then, as you guys know, with my 50 holdings, I did categorize them and allocate them to their own little category here. And this is a pie, so it's kind of like a pie within a pie here. So I have technology, consumer staples, industrials, finance, real estate, restaurants and food, pharmaceutical, and then I got some meme stocks here. Lowest percentage. These are my allocation percentages of each and the targets. So the actual and then what I'm targeting. So technology is a little bit overweighted here. I'm completely fine with that, honestly. Consumer staples, we can kind of re-up here with consumer staples. Consumer staples are the steady eddies, if you will, of my stocks. They're not going to do technology numbers. Technology numbers are double-digit growths. They could have dividends. They could not, but they're pretty explosive. Consumer staples are very steady eddy. They're going to get the job done. They do have dividends. They're long-standing name brands, long-standing companies. Things like Procter & Gamble, right? Target, Costco, Walmart, the Clorox company. Yes, the Clorox wipes. Colgate, Palmolive, McCormick, the spice company, right? Church & Dwight, Lowe's, Kraft, Kroger, and then TJ Maxx. TJ Maxx has been on a tear as of late, up over 21% on the TJ Maxx position. Fantastic here. So that is the consumer staples. I'm not really looking for anything tremendous with them. It's more of kind of a safety net to help balance out my technology stocks, because when these go down, it really pulls my portfolio down. But as long as these kind of stay where they're supposed to, it helps diversify that risk there for you. Industrials and energy, I will say this, my real estate portfolio, or my real estate sector, I should say, has been doing well, up over 21%, and just 3 stocks within my real estate portfolio here, and that's Public Storage, Federal Realty, and Realty Income Corp, affectionately known as O, very simply. They are all dividend payers as well. And Public Storage is a very easy stock to own. It just does what it has to do. Public Storage business model, very simple. It rents those spaces out where you can store pieces of luggage, anything that doesn't fit in your basement, so forth and so on. And that business, no matter if there's a pandemic or not, is always running. That's another thing. It's pandemic proof. And as you can see by the return, 24%, you can't be mad at that at all. So with that being said, guys, let's kind of go back to the home screen here. We have 845 for the balance, up over 13.5%. Dividend $6.21, and then market gain of 63.30. It looks like. All in all, a very good portfolio here. The stock of choice today that we are going to review is Palantir. Palantir is an AI related stock. It was incorporated or discovered in 2003 in Denver, Colorado, and it's been getting a lot of press because of the whole AI boom. Currently, it is trading at, after hours, it's trading about $32. And if we look at the analyst forecast says it's a hold as of right now. Let's go into the company just on the financial side, and I'll try to make this quick for us. So on the financial side, revenue growth has been consistent and explosive with Palantir. As you can see here, very good. Double-digit revenue growth every year since 2019. Can't be mad at that. Okay, let's go to the operating income, because I always like to go to operating income as well. Operating income has turned positive in the past 2 years, which is also good. Okay. We also look at free cash flow. Again, free cash flow has turned positive in the recent years as well, and has remained kind of consistent around that 700 million mark there. Okay. Let's look at, I always like to look at, let's look at the balance sheet fairly quickly here. The balance sheet with cash and cash equivalents. We look at cash growth. I always like to look at cash growth as well. Make sure that the cash is continuously being pumped in and being held as well. That's always a good sign. Constantly in the green, has been in the green since 2020 here. So that's also good to see. I also look at assets. Are assets increasing? Assets are increasing. Total liabilities. I like to see liabilities decrease typically. This is a mixed bag here. It's kind of, it looks like it's consistently around, say, 600-700 for the current liabilities, and then total liabilities is even up a little bit more here. Okay. Total debt we have, and we have net cash debt as well. Okay, so net cash, and then we have our total debt right here. Total debt, we do like to see decrease. It has been decreasing somewhat throughout the year. Nothing really too dramatic that I've seen that have come out. Then we go to the cash flow. So things like net income. Net income has increased. It's gone positive. Operating cash flow has increased. It has gone positive as well. As you can see, operating cash flow has increased from a percentage-wise as well. Free cash flow, we talked about that. That's gone positive as well. All in all, very good. To me, Palantir is a very good company. It does not have a dividend, as you can see. But I think the upside is tremendous with Palantir just because of that AI type of forecast here that's going on in the business world here. Things with the language models are going to be big. As long as you have ChatGPT, as long as you have these pieces that speak about AI, Palantir is going to be a very good stock to own, I believe. The forecast looked like the analysts on the 12-month forecast. You have a high of 35, average 24, and then a low of $9. Something drastic would have to happen for Palantir to go to $9. So I highly doubt that that's going to happen. But with that being said, anything can happen. But I am bullish on Palantir, especially in this environment here, especially with the kind of the unknown in terms of business, in terms of, security, technology security, cybersecurity. those pieces that Palantir can fit into as well, I think it's a huge pocket that Palantir can come in and be very valuable. So with that being said, guys, we're going to end this video. If you did find this video valuable, feel free to like, subscribe, comment, let me know what you think. And as always, thank you and happy investing.